Good morning, this is Steve Freed in Chicago with the morning grain comments. Overnight, prices are mixed. Beans and soybean oil is down. I think there was overnight some lower palm oil prices, and I think the market is a little bit concerned about reports of record Mato Grosso, Brazil soybean yields in the early harvest, and also lack of confirmation that China might come in before Saturday and buy some U.S. ag goods. Wheat is trying to retrace some of yesterday's losses. We thought that with wheat prices nearby Chicago March reaching four-year highs, there might have been some profit taking yesterday. But again, we're looking at three fundamentals in wheat that remain supportive. Number one is that Russia is probably going to export less wheat than that the USDA is suggesting. Russia exported 25 million tons of grain between July 1st, 2019 and January 16th, 2020. Of that amount, almost 22 million tons was wheat. The same period a year ago, there was 30 million tons of grain shipped, of which 25 million tons was wheat. We're also still seeing protests in France that's clogging logistics and slowing exports of wheat out of Europe. Finally, there was some people that hope in this whole process of China buying U.S. ag goods, they might buy some U.S. Wheat. Also, from a weather standpoint, Brazil's fine, but Argentina is dry, and we'll see if that's going to be an issue. Now, there is a little bit too much rain in northeast Brazil, which could slow harvest there, but right now it's not an issue. The other thing is that we noted that Argentina corn prices have rallied enough to where U.S. Is now competitive to the world, both in price and in quality. There's a winter storm that's kind of moving across the Midwest in the next 2 to 3 days, so I hope everyone stays safe. Driving in today from Chicago, we had some snow showers, but traffic was moving okay, so we'll just have to see how the evening commute is. On Wednesday, the funds were sellers of 4,000 wheat. They bought 5,000 corn, sold 5,000 beans, 4,000 meal, and bought 4,000 soybean oil. We estimate that the managed funds right now are long 38,000 Chicago wheat, short 90,000 corn, net short 20,000 beans, short almost 40,000 soybean meal, and long 100,000 soybean oil. So China, whether they buy or not, when they buy, might be the only chance for a rally in the grains early in 2020. Everyone's looking for big world crops in 2020 that could offer resistance to the marketplace. And in the wheat, we're approaching $6 in the nearby wheat and here in Chicago, and that seems to be a kind of a high price. So unless there's a weather problem or a pickup in demand, we should find this to be a strong resistance. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.